This episode of the What the FinTech podcast is sponsored by SaaScada. Hello and welcome to another brand new episode of What the FinTech, the podcast from the team behind FinTech Futures and the Banking Technology magazine. My name is Paul Hindle, editor at FinTech Futures, and for this episode we're joined by Nelson Wootton, CEO and co-founder of SaaScada. Nelson, welcome to the show.
Hi, Paul. Thanks very much for having me. It's great to be here.
It's great to have you here. And just to get started, can you tell us a little bit more about yourself and SaaScada then?
Yeah, sure. So we provide a cloud-native core banking system, kind of core banking as a service, if you will. It comes about because my co-founder and I, around 11 years ago, we built a bank in the UK and had to buy core banking software and found the process wholly unfulfilling. And having scaled and sold that bank, we decided to go back into the market and address the issues that we saw with core banking. And SaaScada is a result of that.
Excellent. Well, sounds great. And again, it's great to have you here. And thanks so much for taking the time out to speak with us today. So on the show this week, we'll be discussing core banking modernization. So we'll be taking a look at the key benefits of modern core banking solutions and the growing need for banks still running legacy tech to upgrade to the latest technologies, as well as the challenges that banks face when it comes to upgrading their cores, the best strategies to carry out a core transformation program to limit the risks involved, and what's next for core banking technology in the near-term future. That's all to come shortly, but as always, we'll open with our news in numbers segment. This is where our guest has gone out and found a news story featuring an interesting number to discuss and get us started. So, Nelson, what have you brought along for us today?
EPI, European Payments Initiative. I don't know if you're familiar with that, but they've been kind of working for about 2 years on a peer-to-peer payments system across Europe with both merchant acquirers and retail banks, and essentially cutting out the kind of traditional card schemes that much of that sort of retail payment landscape is currently dominated by. So real-time payment schemes allowing me to transfer money directly to you or to some sort of merchant instantly. Super, super interesting that they've already got to 14 million users across Belgium. They've just launched in Belgium, Germany, and France, and handled something like 8 million transactions since launch, which I think is a phenomenal number to have accomplished in such a short amount of time. Super interesting landscape, super interesting space.
Excellent. Yeah, well, I guess building on that, I mean, where do you see that going then next? Do you see that just going up and up and up now, or?
Yeah, I think it probably will. I think there's a lot of frustration with payment rails. And I know that central banks are desperately mandating and working towards more and more instant payments. And instant payments tends to be really good for me to use style transactions, but actual retail transactions, it isn't there yet. And partly that is liquidity. Part of that is kind of to do with assurances that money's been received and that I'm happy for goods to leave my premises, so on and so forth. I think that is a space that we still desperately need to do a whole load of work to improve on. And when I look at some other areas of the world that are actually quite a long way ahead of us in this sort of arena where they're building out kind of instant payment schemes from the ground up immediately, I think there's room for tons and tons of improvement. And I think this is going to grow. I genuinely do. I think the card schemes are under pressure and will continue to be under pressure. I think we're interchange, which is a kind of fee that card schemes shared with the issuers. So there's a multi-party situation going on here. So there's acquirers, merchants, shops, issuers. They're like banks that kind of give you a credit or debit card. And there's charges for money to move from one side to the other. And interchange was something that issuers were paid back from the charges that were levied against acquirers. So whenever you kind of receive money as a retail organization via card, some percentage charge of that will go to the card scheme that enabled that transaction. And that whole business model is being disrupted by changes like this. And it's largely invisible to everyone outside of the industry. We just pay for goods. But to those that are on the merchant or the issuing side, there's a lot of complexity and that whole business model is transforming. And I think it's super interesting and right, because there's a fantastic amount of money is being made from consumers. European legislation kind of squeezed that down considerably. That changed the landscape. But I think peer-to-peer payments such as the European Payment Initiative. I think it's branded as Wero or Vero, depending on where you are in Europe, is super interesting. And that it is getting that much traction that quickly shows a kind of real desire for change in that landscape.
So moving on to our core topic of discussion, if you will, which this week is core banking modernisation. Obviously, SaaScada are a big player in this space. To kick things off then, what are the key advantages of modern core banking solutions? And from the conversations that you have with clients and potential clients, what are the top reasons driving their decisions to upgrade?
I think probably it's a big, complicated area, this. So I'm going to break it down by kind of looking at the challenges we faced when running a bank. And we've used those to build out a solution that addresses those challenges. So core frustrations really come from the time it takes to get data out, which you wouldn't think takes a long time, but actually can take 6 to 8 weeks. Most banks run 6 to 8 weeks behind reality. It takes that long to pull the data out of different systems, sew them all together in spreadsheets, reconcile them, present them up to management. And that's quite a long time in today's world. Technology, the pace of change is rapid. And then once you get that data, you can start to spot things that are working in the products you've got in market, and of course, things that aren't working with the products you've got in the market. Then you want to go back and address the challenges, the things that consumers aren't really engaging with, don't really see much value in. And in those instances, you might well have to go back to your core provider to say, hey, look, we need some changes here. We want to address these issues. Consumers aren't loving it. We need you to make a change. And then they'll kind of come back with, yeah, we can probably do that next quarter. And it's going to be a staggering amount of money to do. And then it's a technology project, so it generally overruns. And you can often be looking at 2 quarters. Then you get your change back and you push it out to customers. And then you got to wait another 2 months to find out whether any of those things worked. And that whole iteration is just incredibly slow in today's world. And so really, what modern core is about real-time data to help you understand what is and isn't working, and then a proper full self-service product system that allows you to make changes in real time to your products without engaging with the service provider, without handing over lots of your precious money to make sure those professional services charges and changes are implemented. You should be empowered as an organization to make those changes yourself and see in real time the effect and impact that those changes are having. Really, for us at SaaScada, that is the vision that we are building and working towards. And that's really what modern core technology should enable your organization to do.
Excellent. Yeah, I mean, I guess building on that, I mean, is that composability, that flexibility, is that key for modern core solutions now? And given the rapid rate of technological change, how important is it for banks to be able to pivot and respond to changes quickly?
I think it's critical, right? It's critical for a bank to be able to change and respond to stuff in time. Some of those changes are driven by regulation, legal changes. You don't want those things to be expensive. You don't want those things to be on your roadmap. You just want to be able to implement them and get on and move on to the next thing. And believe it or not, the reason fintechs exist and the reason fintechs are taking business from the bank, some of them have managed to move all the way up to kind of primary wallet usage, i.e. being the number one bank that the user uses. But even as a secondary bank, they're there because they're addressing the challenges that some of those bigger, more archaic legacy banks are not addressing. And there is value there. Consumers are using these services because they see that value. And if it takes you a year to implement a change, the whole world could have moved in that time. And then in that year, the regulator says, actually, we also need this X, Y, Z, and we're going to start making sure that you report an A, B, C. And suddenly that year becomes a year and a half or 2 years because you've got to get the regulatory things in as well. That pace of change isn't sustainable. And what the fintechs have always done really, really well is change faster. And really what modern core enables these institutions to do is keep up with the pace of that change. So I think it is absolutely critical. And there is absolutely no doubt about it. In every facet of our lives, change is happening quicker and quicker and quicker. If you think the pace of change is slowing down, you're deluding yourself. It is only getting quicker, and that will impact all areas of business, not just financial services. And you see that with the growth of all these huge organizations, giant tech companies out of America that maintain and keep agility in the very basic products that they and the services they provide to consumers. This is what financial services is going to have to do to keep up. We shouldn't be looking at 6, 9, 12-month projects. We should be turning these things around a lot faster in order to address the challenges and the issues. And the winners are going to be those that are able to do that.
Yeah, and I wanted to take a look at another number from a SaaScada report from earlier in the summer. 77% of UK bank innovation leaders said that challenging the status quo could put their career at risk. It seems there's obviously a lot of fear around the size of core modernization projects and the potential risks involved. But then on the other side of that, if you're a big bank still running legacy systems, the risks of not modernizing now and being left behind with old tech are also there. So how can banks reconcile that? And what needs to change at these legacy institutions?
Yeah, I mean, it's a scary statistic, isn't it? And more than 3/4 of people are worried that change is going to be a career ender for them. And I think part of that is how organizations have traditionally approached change. One of the really nice things about modern technology and modern cores is they are substantially cheaper to deploy and run than legacy technology. By leveraging kind of cloud infrastructure, they're a fraction of the cost of kind of legacy cores. And then when you get into kind of real-time data and some of the clever things you can do with that, we talk about transformation as something that happens gradually over time within an organization's comfort and risk parameters, because big bang core banking replacement projects have always been an absolute nightmare to do. They're horrifically frightening. A board desperately doesn't want to do that. It's the kind of thing a bank does when it absolutely has no choice. And the last thing you want to do is have to make a critical decision like that because there are no other choices available to you. So how do you break it down? How do you make that process easier, more digestible, less risky? Well, one of the really nice things about real-time data is what you're effectively getting is a stream of real-time events that are happening off the back of a core banking system. And what you can do is, in real time, scoop up those events, pick out the data points that are important to you, and build real-time data reports that get populated as transactions fly through the system. And what's really nice about that is you can make those reports in almost any format you like. And so what we do with financial institutions undergoing this kind of transformation is we'll stand up SaaScada's system inside the bank alongside their existing legacy core. And then what we'll use is the real-time data stream to map the output from SaaScada's system to emulate the output from their legacy core system. And that allows us to feed into all the kind of reporting infrastructure and the management information and the reg reporting systems they've already established, and effectively kind of sits invisibly inside the bank. And by doing that, you can then A, launch new products and services on SaaScada's core yourself instantly, whenever you want to. And B, you can then begin the process of migrating old products off of your legacy core into your new core. And it is an incredibly low risk, cost-effective way of transforming a bank. We've done this several times now, and we have today 100% track record of getting it done and delivered. And it's a really powerful, if very different way of looking at a transformation project. So rather than kind of trying to turn everything off on one system on Tuesday and all of the new system on Wednesday and hoping everything migrates, moves and works perfectly. It's much more about a gradual process of running the two side by side, getting comfortable, getting familiar, and then moving products across. And that works because new cores are a fraction of the cost of the old legacy cores. So it isn't like you're going to be paying two huge, great big bills to run these two systems side by side. The cost of legacy is extortionate, and that's partly because it's very old technology that's 10, 20, maybe 30 or 40 years old in some instances, whereas kind of new technology utilizes cloud, utilizes on-demand compute, utilizes kind of unstructured and structured databases all as a service within cloud providers. And doing it this way around is so much cheaper than trying to run your own data centers with guys who have to get up 24 hours a day because disk drives break and fix things and so on and so forth, and all the pain that goes with kind of running older legacy technology.
Excellent. Yeah, and obviously you've touched on a few points there, but I mean, what would you say are the best strategies then for carrying out a core transformation program? And what are the different phases of a core banking migration? How can banks prepare for that?
I think what we'd urge, what we typically look to work with is organizations, firstly, do you really want to change? I think going through a core modernization, but without actually changing anything, is swapping out provider X for provider Y. And we don't necessarily see a lot of value in doing that. Where we see value is kind of the willingness to address and change process, improve process, streamline process, optimize it, make it better for the people who work within the organization, as well as customers that engage within a financial organization, the customers themselves. So once you start getting into understanding that, then it's about picking some quick wins, right? So any kind of technology project is everyone starts worried, concerned. Will it scale? Does it work? Is it going to take 4 times longer than we thought it was and cost 8 times as much as we thought it was? Find some quick wins within an organization. Move something small. Launch a new product. That's something we've done really successfully. So we've often worked with organizations who saw new opportunity in market, and deploying that product on SaaScada's core was cheaper than modifying their legacy core to address those product needs. Having done that, they then go, this is quite nice. Can we move some of our other products across? Of which we absolutely, please help yourself. Go ahead whenever you're ready. That kind of strategy gives you a real sort of soft landing into modern technology without absolutely the risk of things breaking, customers being disappointed, and regulators breathing down your neck. Nobody wants those things to ever happen. The trick is, how do you get off of old onto new and make sure you're minimizing your exposure to any of those events? And so we call this a coexistence model. And this is an incredibly successful way of doing it. And it allows you, typically running a core like SaaScada is no more expensive than having a single consultant deployed within a bank. So banks will run with multiple consultants dealing with multiple projects at any one time. Running a core like SaaScada is comparable to just having a single consultant in a bank. That's how much cheaper it is to run on modern technology. So if you can stump up the price of paying for a consultant to kind of tell you how to do this, you can certainly afford to run a platform like SaaScada while you figure out how to step things across from old legacy to new modern technology. For us, it's really about empowering the people who work in the bank and the bank itself or financial institution to make sure that they're able to deliver real results to their customers.
Excellent. Yeah, I mean, diving back into that SaaScada report, then something else that jumped out at me was 2/3, 63% of respondents think that most cloud-based core banking platforms are just the same legacy tech with a new lick of paint. How much of a challenge is it then for modern core banking companies like yourselves to alleviate the fears and alter these perceptions?
Yeah, I've got to be honest. I think they're right about that. It's really fairly straightforward now with cloud to virtualize almost everything. I mean, I'm not sure that anyone's kind of virtualized an AS400. And for your listeners, some of them will smile and know what one of those are. And for everyone else, don't worry. Big piece of old mainframe technology. But a lot of technology can be virtualized. And once it's virtualized and placed in the cloud, a vendor can claim that it's a cloud-based system. But That's not really the point. You're still running a giant monolithic piece of technology. You're just running it in someone else's data center instead of your own. You don't get any of the upside of cloud, right? So the upside for cloud is really about ultimate flexibility. So that monolith might require 15 servers, virtual servers to run inside the cloud. And there isn't a time where those servers could ever be turned off because that monolith needs all of those services running in order to run. But real cloud core uses kind of things that are called like functions as a service or Lambda as a service, which are really just, here is a little piece of code I would like you to execute. And if I'm not doing any transactions, I don't have any code to execute. You literally only pay for the pieces of code that you execute. That's what modern cloud looks like. So I'm not running tons of big infrastructure waiting for somebody to buy a cup of coffee. The system is quiet. Nobody's paying for anything until somebody buys a cup of coffee. And then as that transaction comes through, everything wakes up, processes that transaction, fills all the necessary reports with what they need to be filled with, and then it all goes back to sleep unless there's another transaction running through. And the difference in those two approaches is really what we're talking about when we say cloud native. And it is orders of magnitude different from taking kind of your monolithic legacy code and sticking it in a AWS or Azure or Google Cloud and saying we are cloud too. You're not cloud. You're just hosting it in the cloud. That's not the same. Cloud native is about utilizing cloud technology and all the low cost and the resilience and the redundancy that comes packed with those kind of technologies to deliver the service. And they are very, very different things.
Excellent. Yeah. And I mean, I guess, do you think, building on that, and do you think cloud native models have now become the de facto in terms of core banking modernization? And what kind of trends are you seeing there?
Yeah, they are. And interestingly, we are seeing a lot of emerging economies jumping straight to that place. And that emerging economies have traditionally done that, right? I'm not going to stick down telephone lines and landlines and all that stuff. I'm going to jump straight to mobile. Well, those kind of same places are jumping straight to core as a service. I'll stick my kind of core system in the cloud. Let me focus on the things that differentiate me. And we think that's a really super wise strategy, right? So your core probably isn't a massive differentiator for your financial institution. You probably run similar products to the bank just down the street. The things that make you different are all the things that sit above your core banking system, your customer service, your onboarding experience, your KYC, your AML, all the really good stuff that sit with your brand and your values. And actually, as a business, we're kind of saying, don't invest tons of money building a core. Cores exist, the technology exists. It's there for you to buy off the shelf. It isn't a key differentiator. It needs to be agile. You need to be able to change and tweak and move around inside that core to address customer needs. But the things that make you special are all the things that sit above that. That's what makes you unique as a financial institution, not the piece underneath.
Yeah, and one final look at the SaaScada report then. It also mentions that after adopting cloud-based core banking systems, some banks are underwhelmed by their capabilities. How do banks then go about choosing the right core banking partner for them, and how can they ensure that the offering not only can meet their current needs, but also is scalable enough and future-proof enough to handle growth so they don't have to undertake maybe another major transformation project for the foreseeable future at least?
This is super hard for financial institutions to do, and I'm not going to belittle it or try and be glib about how difficult this is. The typical process at the moment would be issue a RFI and then follow that up by an RFP, and that might have several thousand questions in it explaining what we do as a financial institution now, and can you do the things that we do now as a financial institution? I would argue that's a pretty difficult starting point. It's a very good risk mitigation one, in as much as you can at least turn around to the board and say, well, we asked all the questions and we think we understood the answers, if all the answers were accurate and genuine and clear, and we think we've made a good choice here. But it can often turn out that once you get in amongst it and you start trying it and you start playing with it, it doesn't meet your needs and justifications. For me, again, coexistence is a way that mitigates some of this risk. Pick specific things because the costs change. It's orders of magnitude different, right? So a bank would normally go, there's absolutely no way I ever want to run a second core inside my system. We can't afford it. We can't possibly support it. But actually, I think you probably can. And doing this gives you a much lower risk journey through transformation than actually trying to do some sort of big bang project. There's a really good reason why 3/4 of the people that we asked thought their job was at risk in doing it. It is very difficult to do successfully. And if you do it successfully, you almost certainly didn't do it in budget.
Excellent, Jaron. Just to finish off then, how do you see the core banking space evolving as we look to the future?
I think there's still loads of stuff to be done here, right? What I'd like to see happen in the near future is a try before you buy approach. I'd like to, this kind of modern technologies could certainly move to a place where banks could stand up versions of these kind of cores very, very quickly and get in there and actually play with them. I think playing with them and building on them and trying them out is going to be a much cheaper and more affordable model than spending 4 months writing an RFI and RFP and then 2 months reviewing the answers and another 2 months interviewing people and another 2 months negotiating with your shortlisted people. I think try before you buy is going to be something that we start seeing in this market very soon. I think the world is heading in this way rapidly. And I think those that kind of embrace it will keep up really well, but not all will. And that's life, isn't it? I really feel for those organizations stuck inside legacy technology. It can be difficult to get out. You need to build either IT capacity or relationships with trusted systems integrators to help you along this path. But I don't think your core should be the big line item that you're spending loads of money on. I think this is a really relatively boring piece of infrastructure that should scale and do what it says on the tin, be something that you are able to change as an organization, not requiring your provider to get in there and do work or charge you for it. And I think that is what the future of core will look like, and financial services, in order to kind of keep up with the changes that are happening on the other side. And by that, I mean kind of new ways of consuming financial services, AI, all sorts of stuff that's kind of coming in on technology, changing customer expectations. I think we'll see greater segmentation of customers as this technology matures, and I'm better able to serve and understand different customers and different customer segments within one organization. But the core will be a relatively unexciting part of that. It's all going to be about your user interface, your customer service, your journey. And making that pleasing and fun for customers is important. Your core shouldn't be the thing you roll your eyes at and go, oh my God, how are we going to get changes in to make sure this feature or this functionality happens? You should be empowered to do that. And I think that's where we'll be.
Excellent. Sounds great. And I guess what's next for SaaScada as well in the near-term future? Do you have anything in the pipeline that you could tell us about now?
Lots of expansion going on for us at the moment. So we're doing a fair bit of work out in the Baltics, Central Europe now. We're starting to look towards the Middle East and Southeast Asia as markets to land in as an organization. We see a lot of opportunity in those markets. Africa has also absolutely exploded for us. And again, these are all places that are very innovative, right? Very kind of, how do we do things differently? Is the old way the best way? Is there a better way of getting money moved from A to B and B to C and so on and so forth? These are the organizations that are really quick, embracing change and looking to kind of modernize. And these areas of the world are transforming financial services experiences for customers. And those of us that are lucky enough to travel will have seen that and seen quite how different it is in different parts of the world. And actually, Europe isn't as cutting edge as it likes to think. It's a lot further forward than the US. There's no doubt about that. But actually, other parts of the world are stealing the march on financial services delivery at the moment. And those are the places that we're really keen to go and work with so we can bring some of those lessons and some of those innovations back into Europe.
thanks again, Nelson, for chatting with us today. To close out the podcast, we have our now infamous FinTech Jail. So this is where we ask for an industry term, buzzword, or trend that you've seen or heard enough of. Or, of course, you can advocate to free one of the previously incarcerated terms. So what would your selection be for this week?
Oh, I hate this because my term is going to be AI. And looking back, I actually used the term myself during this podcast. And the reason I hate it is because it doesn't mean anything. It reminds me a bit of the kind of blockchain phase that everyone went through some years ago. And lots of the blockchain people are now AI people and great. It just doesn't mean anything. I think artificial intelligence, the technology and those systems are in our lives every day, but we don't call them that. We call them facial recognition because we understand what it is that it does. And when we pick up our phone and we look at it, or it uses our voice recognition, those are all kind of founding sort of things that AI is starting to do. AI is just so broad and meaningless, really. I find it an incredibly frustrating term. And I dread the panels and everything else that I sit on when somebody goes, right, and what about AI? And it's just like, what do you mean by that question? Is it an incredible? Yes, but have we got a long way to go before everyone's going to be out of the job? Yes, like decades. We're a long way. It looks much smarter than it is right now. I promise you that as a techie, it looks a lot smarter than it actually is. And we've got a long way to go before you need to be losing too much sleep. But is it a really cool efficiency tool? Yes. The ability to kind of take notes in meetings, which nobody likes doing, pretty well developed now. Those kind of operational efficiencies in our day-to-day lives, I love. I think are really great. The fact that my face can be used to authenticate me whenever I pick up my phone rather than entering a PIN code, great. All those little fractional savings are super useful. But as a broad term, I find it super frustrating. Sorry.
So that's fine. I mean, AI is actually no stranger to our FinTech Jail. It was actually thrown back in 2020 and then broken out in 2022, just before the whole generative AI hype cycle began. I mean, you mentioned there we've still got a long way to go with this. I mean, do you see the hype dying down anytime soon, or is this going to keep kind of like building?
It's interesting, isn't it? I don't know. I'm struggling to work that out. I kind of always thought the blockchain hype went on way longer than it should have done. But then AI came in and replaced that. I think sometimes we need a thing to hang on to and chase after, and we haven't got another thing to replace that yet. But do I genuinely believe lots of investment money is going to evaporate over the next few years? Yeah, I absolutely do. I think it's very difficult to see clear value propositions coming out of AI, and very few organizations have successfully done that. It isn't just a case of throwing some large language model at problem X and hoping something good will come out of it. That's probably not going to work. But is it going to make customer services a little bit slicker? And is it going to make my meetings a bit quicker because I don't have to write up the notes myself, and so on and so forth? Little progress like that? Yes. But do we want to pay loads of money for little steps like that? Not so much. And I feel like the hype, we won't need employees soon, but the delivery really is, you're 20% more efficient. And that means that the numbers are out of whack at the moment, I think.
I think you made a good argument there. So I'm more than happy to throw AI back into the jail again this week. And we'll see later down the line if anybody wants to come on the show and break it back out again. But for now, Nelson, thank you so much again for joining us today. It's been a pleasure.
Thanks, Paul. Great chatting to you.
Well, that's all we have time for this week. Thanks, of course, to Nelson for joining me. As for FinTech Futures, you can find us online at fintechfutures.com, on X at FinTech Futures, and of course on LinkedIn. If you like this podcast and our other episodes, you can subscribe on Apple Podcasts, Spotify, SoundCloud, or your favorite podcasting service to get notified about future episodes. Thanks as well to Arama for editing this podcast. You can check them out at arama.tv. As always, thank you very much for your support, and we'll see you soon for another episode of What the FinTech. But until then, goodbye.